I'm sure some other people will join us. So thank you all for being here for our Rev Ithaca Startup Work session on SBIR, STTR accounting. We are incredibly fortunate to be joined by Renata, who to say is an expert in this would be an understatement. Many companies in our ecosystem here in Cornell and in Ithaca at large in the greater area have been beneficiaries of SBIRs. Many continue to apply. And there's some stuff you need to really understand to make sure you stay in compliance. So non-dilutive money is great, but you got to follow the rules. And as my colleague Tom likes to say, orange jumpsuits come in all sizes. So you don't want to break the rules. And if you start and do it right from the beginning, then it's pretty straightforward. You know, there's a process. If you don't track things correctly, then you're going to have a little bit of a mess on your hands. So we are, again, very, very fortunate to be joined by Renata today, who's at Sciarabba Walker, and she's going to talk through some of the intricacies of accounting as it relates to SBIR. So I'm going to stop sharing my screen so I can turn it over to Renata. What I want to point out to you all, if you have questions, use the Q&A panel in the bottom, and we will get to the questions after Renata's presentation. But please don't wait to the end to ask your questions. As questions come up, put them in the Q&A panel, and then as you know, then towards the end, we'll kind of go through. Usually there's some that are in common and so forth. All right, so we're really glad to have you all here. I'm going to turn it over to Renata to get going.
Thank you, Ken. Thank you for introducing me, and welcome everybody. I'm really happy to be here and tell you hopefully useful information that you can use when you actually get the grant and as Ken said, start doing things right from the beginning. Some things cannot be fixed later. Some things can, but not everything. So so we talk about various most common items you need to remember about the rules. Federal rules are complicated. There's a lot of them. Also, they vary depending on which kind of grant you have, which kind of agency you have it from. So there's a lot of nuances, but we'll try to cover the basics which apply to most of those grants. Before I go on, quick introduction of our firm. We are a CPA firm located here in Ithaca. We do have a high technology and emerging businesses specialty group, and we specialize in working with startup companies, early startup companies. We work both with companies funded with venture money, but as well a lot of companies which just start with federal grants. So we're happy to help both with accounting services, you know, just bookkeeping, financial statement preparation, your federal accounting rules setup and things like that. We also provide tax services and other consulting services. So just a quick introduction. If you ever would like to reach to us, there are 4 of us who are partners and specialize in this. So feel free to do that. I have a couple of slides just about the program. It's probably you all are familiar with it since you are on this webinar, but I thought just to be on the same page in case somebody is just interested and haven't had a chance to look into it. I just wanted to kind of do a brief introduction into what the program is. There's actually 2 separate programs, sister programs. So one is the Small Business Innovation Research Program. Again, it's for small businesses that engage in R&D work, and there's a potential for commercialization. Many different federal agencies participate. So this is kind of a cross-the-board program, and different agencies can participate in it if they want to. We have NSF, NIH, USDA, Department of Defense, Department of Energy, and there are a few more which we see less frequently. So the rules may vary a bit from agency to agency, so you need to be aware. I mean, of course, you are aware from which one you got the grant, but you need to be aware that the rules may be a little bit different. There are 3 phases in this program. The first phase, concept development. The funding right now is between $50,000 and $300,000, depending on the agency. You have phase 2, which usually covers prototype development. And this is much more money. It's usually longer period. And it's again between $600,000 and $1.8 million right now. And again, depends on the agency. And phase 3, which doesn't have actual funding, but there is some assistance you can get from the federal government. The sister program is the Small Business Technology Transfer Program, STTR. It's the same rules, very similar. The main difference is that there is a U.S. research institution which is involved. So this program is supposed to facilitate cooperative R&D between small business and research institutions. They often are universities. So those awards will have a sub-awards always, because there is the requirement. These are just general goals that the federal government set up for those programs, and why they set it up. I don't think we need to go through them, but I just put the slide here. I think you probably can get the slides after the presentation if you'd like to see this. Okay, so let's move on. So you have received the SBIR phase 1 grant, and it's great. And now you need to figure out what that means from the accounting point of view and just compliance. Yeah, there are rules you agreed to comply with when you applied for the grant and you said, okay, I'm gonna get the money. So where are all these rules coming from? So there are 3 places. The first thing is basically a law, a federal guidance for financial assistance, which is codified, and I have listed it in here. It's Title 2 of Code of Federal Regulations, Part 200, and it's uniform administrative requirements, cost principles, and audit requirements for federal awards. If you put this in Google, you'll get straight to the law and you'll have access to it. It's all free. There are subparts, different subparts in this, and they deal with different things. So everything that I'm going to be talking about is coming from this. If you want to look it up and get more details, you can find it. But basically, by accepting the award, you agree to follow those regulations. And presumption is that you understand them and you will follow them. They're going to be referenced in different places, in maybe award letter. They want to be referenced in various questionnaires and information that you are going to get on web pages where you're going to look for information. So just wanted you to be aware of what it is and what is how can you access this information. So let's talk about kind of major things that you have to remember and you have to set up your accounting system for when you have federal grants in general and SBIR in particular. We're going to be talking about cost tracking. So expenses, expenditure, cost tracking, all this is very important. And there is related reporting required of how much you spent, what kind of expenses you spend on, things like that. Revenue recognition, we touch base on that a little bit, how do you recognize revenue from the grant. Internal control policy. So you are required to comply with regulations, but you also have to have internal controls in place to make sure that you are complying with the regulations. So there are a little bit different things, and you need to have some policies, and we talk about it a little bit what that means and what kind of policies, but they need to be in place. Financial statements, obviously, you will need those for various maybe financial reviews the agencies will be doing, or maybe for an audit. So we'll talk about this a little bit, and we touch base on audits, what kind of audits you may be subject to, and when would you be subject to an audit. So before we start, I just want to touch base on an accounting concept that it's kind of important, and you may not be necessarily attuned to that, because most of you are not accountants, but you need to have an understanding of basis of accounting and what basis of accounting are you using for your company. There are different bases of accounting out there, but there are 2 which are most common. So there is cash basis, of accounting. And that basically means that you record your expenses and revenue at the same time when the cash transaction happens. So if you receive a cash on the grant, that's your revenue on that day. If you pay expenses, that's the expense on that day. It's very simple method of accounting, easy to understand, but it has a lot of drawbacks. And it's really not necessarily preferred by the people who want to use financial statements like a third parties. So the second one here is accrual basis of accounting. So it's generally accepted accounting principles. That's what the financial statements of all companies in the US are prepared on. And the main difference is that revenue is recognized when earned and expenses are recognized when incurred. What that means is that you have an expense when you receive the service. So maybe you had a subcontractor who worked for you in November and December, and they did send you an invoice finally in February for those services, and you paid it in March. So on a cash basis of accounting, you'll have an expense in March of 2025. On accrual basis of accounting, you have expense in November and December 2024. And that's important because you need to have expenses in the correct period when you track them. And this is on accrual basis for federal purposes. So we often see issues with this, and the clients don't think it matters when they record expenses as long as it's correct expense and, you know, allowed and everything else. But so you need to be aware of what basis of accounting you could put your books on, and keep in mind that that's what's going to matter when you have to report your federal expenditures. So cost accounting. So that's the major issue here with federal grants. You need to track your expenses and in certain way. And grant budgets usually are structured like that. Yeah, you have direct costs, could be labor, materials, travel. Then you have indirect rates, which is supposed to cover your indirect expenses. You may have one rate, two rates, sometimes there are three rates. Here I listed, you know, we can have a fringe rate and G&A, general administrative rate. So these are additional funds you're receiving to cover the portion of your indirect expenses. And a lot of grants have a fee. Yeah, so that's pretty much like a gross profit on your grant. So what you need to do, you need to track direct expenses. They need to be tracked and accumulated separately from each federal grant. So your accounting system has to be set up in such a way that you can generate a project ledger. It will set, you know, this is grant A, B, C, this is my contract with the customer, and some other cost centers. And during the period of time, these are the costs, direct costs incurred on those different grants. That's required, and that's you need to have it set up so you can do it. There are different ways to do it, but the end result has to be you can show how much you spend on the grant and when. The other cost centers you also need to track. You need to know how much were your internal R&D expenses. So these are R&D expenses you funded with your own money, whether that's maybe equity raise or some convertible debt you have or any other funds. And you have to keep them separate because there are some nuances of how they are treated for various calculations around indirect cost rates. So that's a requirement. Sales and marketing costs should be tracked separately. Most of those costs are not allowable, so they have to be segregated. And G&A expenses, so these are other allowable indirect costs, should also be separate. So those should be in the separate cost pools. And you also should be tracking unallowable costs separately, because certain costs are just unallowable by definition. There's a list of those in those in the guidance I just showed you of what they are, and things like alcohol, you know, things like lobbying, obviously we rarely see, but interest expense is also not allowable, or you know, legal costs associated with obtaining a patent are not allowable. So you need to be able to identify them in your chart of accounts and have a policy around it that you're tracking them. And then you, of course, have to have supporting documentation for all these transactions. It's required. So all your vendor invoices, for all the purchases, indicating what was done and, hopefully approved, and maybe also indication on which grant that's related to. And timesheets to support your payroll allocations. So if you're allocating payroll to gross wages to the grant, you really need to track time and have timesheets. You cannot use budgeted amounts. Please remember, you're not supposed to just assume somebody worked on a grant, it was on the budget, we put 4 months of this person's salary, and you can just put it in there. You need to have timesheets. And as I highlighted here, there should be indications of approval. So that's, we touch base on internal controls a little bit later, but you need to have somebody approving those invoices, approving those timesheets, saying, signing in, saying that's correct. That means that the internal controls are set up. All records must be maintained for a period of 3 years from the date of submission of the final financial expenditure report. So you need to keep them. There are, of course, other reasons why you should keep all your records, tax-related reasons. You should be able to find them. You need to be able to track them. And if somebody comes and asks you 2 years later, you need to be able to find an invoice for an expense that you allocated to a grant. A little bit more information on this labor costs. I just said time tracking, the timesheets that they need to be signed by an employee and supervisor. Paper timesheets are fine. You still can have printed timesheets and you still, they signed, they still okay. You can, scan them to PDF, they'll be fine. You can, of course, use time tracking software as well. Just please remember, for time tracking software, you need to make sure that you have this approval function in it. It cannot be just that somebody puts in time, employee puts in time, and that goes straight to payroll without an approval, because that would be considered not compliant. So depending on what you're using, you need to just pay attention to that. As I said before, you need to charge actual time to the grant, not budgeted amounts. Somebody worked 40 hours, this pay period on the grant, we're putting 40 hours at actual rates. If somebody worked 60 hours next week, we're putting 60 hours at actual rates. So we're really tracking actual time, regardless of, maybe you have budgeted this person to work, 100% of the time, and they ended up not working 100% of the time. You're not supposed to put budgeted amounts as an expense on the grant. Another thing you should not be doing is changing time allocation back in time. Now, of course, it's fine to correct errors. If there were errors on the timesheet, somebody just put in the correct information, you can go and correct the errors. But the wholesale allocations back, and you just go and change everything, it may be hard to justify why you did that. So just be careful with doing this kind of things. It's better if you just pay attention as you go, whether the correct time is going to the grant. So materials and services, that's often, also in the budget, that's just you need to make sure that they allocate it to correct grants and have some approvals for that. Employee expense reimbursements, you need to have supporting documentation. If employees have credit cards and charge things to the credit cards, the credit card statement is not enough. If they bought something, if they paid for the tickets to fly somewhere and you had travel, you need the ticket. You need the actual document, and there should be, in perfect world, you should have expense reimbursement forms that they fill out, you sign them, there is supporting documentation. You cannot just give people money, like, okay, if he's going somewhere, it's going to cost him $500. Just give him $500. I don't need any documents. That's not allowable. And unallowable costs. So as I mentioned, there are certain costs which are not allowable by definition. There is a list you can access on in the CFR regulations, and they need to be tracked separately. as I mentioned, there's a long list. Not everything, of course, will apply to you, but you should be familiar with what they are and track them if you happen to pay them. As I mentioned, we often see the legal costs associated with patent applications, which are not allowable as general rule. Now, on top of this regulation, there is also your agreement, and the agreements sometimes have different provisions. So as you're probably aware, in some SBIR grants, you may have allocated funds towards paying for legal costs associated with patent costs, and they are direct expenses. So then, that overrides the general rule. So you have to be also familiar with your grant agreement and what the rules are there. So that's how it works. And I mentioned internal R&D expenditures should be tracked separately. Another thing which is often required and you may be asked for that, and that's, for example, a standard question on the NSF phase 2 financial review, is do you track budget to actual? So you have budgeted amounts by certain line items. Are you tracking as time goes along how much you spend? And can you produce a statement which will show that? We do it for our clients in Excel spreadsheet. It can be done any other way. But the idea here is you're not supposed to ask for more money that was in the budget. And they just want to see that you're tracking that.
Renata, we have a few questions coming in. Do you want to take those as they come, or would you rather wait till the end and kind of do Q&A at that stage?
I can take them now. That's not a problem.
Yeah, so if you have view of the Q&A section.
Let me see. Yes, so it seems like we have 4. I'm not sure which order they came in. Okay, here it is. I can read the first one. In STTR, SBIR, there is a 7%, I believe, that may be what you are calling a fee. Can you expand on how we can use that money in tracking? So the fee is basically a profit, and that you can use for whatever you like. You can pay unallowable costs with that. It's basically, I call it a profit on a grant. Yeah, this is not indirect expense. So there is no strings attached to it, kind of from the unallowable cost point of view. How tightly do we track our subcontractor expenses in STTR? So sub-award monitoring is a requirement, and I was going to touch on that. If that's what you mean by subcontractors. So there's different things. There are contractors and there are sub-awardees. If it's just a contractor, the same rule applies as to any other expenditures. You need invoices. They need to be for, allowable activities. They're working on a grant. You need documentation, you need approval. If you have a sub-award, there's actually monitoring requirements that you have as a higher level, as an original awardee towards that sub-award, which sometimes may seem a bit odd because, you're a tiny company maybe, and here you have maybe Cornell as a sub-awardee. Am I going to be supervising what they're doing with the funds? But there is a requirement, and you have to be familiar with that, what you're supposed to be doing, because it will most likely come up during the audit, or they will ask you whether you have a policy for that. Best way to track expenses, QuickBooks is another. We use QuickBooks Online for all of our clients. There's a ton of other software you can use. It's just a question of designing chart of accounts. If we have a VC funding, should internal R&D work done for those activities be under G&A or unallowable? It's going to be a separate cost pool. So obviously, you're not funding this with the grant. It's not a G&A expense. It's an R&D expense. You need to track it separately. It's not an indirect expense. You should track it separately. That sometimes it's the calculations for indirect cost rate. If you have to, I'm going to touch base on it in a moment. If you have to do indirect cost calculations for whatever reason, these expenses are treated a little bit differently. They are added to the base, and I don't want to go into details here, but But you basically have to treat them completely separately from those. This is neither G&A, it's not unallowable, it's just separate altogether cost pool. Okay, I think I answered all of those questions. So please, if you have more, I will try to monitor this, or maybe you, Summer, remind me if there's something there. And the last item here, financial reporting. So depending on which agency you're dealing with, you may have to file on a periodic basis a financial reports. The form used 99% of the time is this SF-425 Federal Financial Report. It's can be done quarterly. Sometimes it's done just at the end of the grant, and some agencies don't require it at all on some grants. So you just have to know and make sure that you understand. If you have to file it, it's electronically filed. It's just reporting a total amount, total expenditures up to date minus total draws and how much is left on the grant. So, so you said you set up everything correctly. You have, you planning to track everything correctly. Now, we bring up the issue of internal controls. So what does it mean you have internal controls over compliance? And I'll try to talk about it a little bit. Here's a definition, basically from the guidance. But you need to have policies and procedures in place that provide, effective control over the transactions and how you record them, and that you spend the money in accordance with regulations and your award terms and conditions, and you meet all these requirements. So there's certain processes and procedures you're gonna have, which gonna touch different transaction cycles. You're supposed to have written internal control procedures. That's the best policy. You may be doing everything correctly. You may be reviewing invoices, making sure everything goes to the correct places. But you're supposed to document how it is done. So if the federal government comes in and asks you how you're doing it, you can hand it to them and say, that's how we're doing it. I listed here a few policies that we usually recommend to have. Internal controls, is something that varies from company to company, depending how they do business and what they're doing, and also the size of the company. So there's no one size fits all kind of thing. But there are certain things that you're gonna have to have. So you need to have a policy about time tracking. Yeah. So how the employees' time is tracked, what forms you're using, who approves everything, how is it ending up in your accounting system. You may want to have a personal policy about PTO and benefits, how this is, how is this all calculated, and who has rights to what. Purchasing policy is important, who buys things, who makes sure that the invoices are correct, and then, codes them to correct grants or accounts. So this should be written down. Travel policy, if you have a lot of travel. If you don't, maybe you don't need it, but, reports, expense reports, if you use any per diems, everything like that. An allowable expense policy, so that's important. Having a policy, how do you making sure that any allowable expenses are coded as such and not charged to the grant. Indirect cost policy and procedures, so how do you track indirect costs, and if you have to calculate rates, how do you gonna go about calculating those rates. Federal billing procedure, if you have cost reimbursable grant and you try, going and drawing money, you should have a policy about how you're making sure that you not overdraw, that you're drawing correct amounts, all these kind of things. So the best way is to have those policies written down. There are various templates you can obtain. We have a few we usually start with our clients. So I would strongly recommend to do that. So I touched base it before and talked a little bit about indirect cost rates. I just wanted to kind of talk a little bit about it. That can be it's not as big an issue for smaller grants when you don't have to do indirect cost rate calculations. So I'm not going to go into details of this, but I just wanted you to get an understanding of what kind of rates you have and how this all works. There are basically two kinds of rates that the federal government is using on a grant. The one is predetermined rate, which is an indirect cost rate that is fixed for an established future fiscal period. And it's calculated based on actual costs from a prior period. It's the rate that you propose in the budget, yeah? So if you have a grant and you said, okay, my indirect cost rate is gonna be 40% of payroll, you know, you're basing it on some historical data. Of course, you don't know what your indirect costs, you don't know for sure what your indirect costs are gonna be over the period of the grant because you're just applying for a grant. And if the government agrees to this rate and they say, okay, that's your rate for the grant, if it's predetermined rate, this rate won't change. So regardless of your future indirect costs gonna be and what's their, you know, percentage toward of a base is, it doesn't matter. You're gonna have that rate, you're gonna charge it to the grant, and that's what you're gonna go get in funding. Obviously, these rates can change every year. You know, if you have a new grant, you may have a different rate because your indirect costs are based now on a different period, but it doesn't change on the actual grant. The other kind of rate is a provisional rate, and we don't see that very often. But I did come across a few sometimes on sub-awards. And the provisional indirect rate is a temporary rate. So that rate that you have at the beginning of your grant is just there so you can use something during the time of the grant. So you're asking for the reimbursements. You know, you have to know how much you want to ask for. They kind of give you this temporary rate. However, they are not final rates. So after your grant ends, you have usually 6 months to provide calculations of actual rate. So what was the actual rate for this period of time? And then if the rate was lower than one in the budget, you may have to return the money. If the rate was higher than the budget, but there's nothing else left in the grant, you won't get more money. So it's a little bit unfair from that point of view, but it's not common. But you need to know if it's good to know if for you to be aware of whether your rate is a fixed rate, final rate, so that then you know what you're dealing with. Also, if with rates, it's the question sometimes is whether do you need to submit indirect cost rate proposal. So it's your first grant, you never negotiated a rate with the federal government. Do you have to negotiate rate? And what it means, do you have to basically submit a proposal which has calculations and a lot of information going into it? It's usually not required for the SBIR, STTR grants when rates are below certain limits. So you may be familiar with this concept. There are those safe rates. This is just an example from NSF SBIR phase 2 rules as they currently are. So as you can see, if your rate is below 50% of total proposed salaries and wages, it's considered a safe rate. So you wouldn't have to submit a proposal. There is also this additional language added now that the rate also has to be less than 15% of modified total direct costs. And modified total direct costs are basically total direct costs minus adjustments for equipment. And I think they only allow $50,000 on a sub-award. So if you have a safe rate, you don't have to submit any proposal. If you want a higher rate, maybe your indirect costs are so high that you would like to recover more, you may be able to submit a proposal, you know, have somebody do the calculations. It's just additional time and cost to do that. So you have to figure out whether it's you know, worthwhile for you. I mentioned revenue. This is just one slide, and just so you have an understanding of what the revenue recognition for grants is under US GAAP accrual basis. as I mentioned, it's not the revenue wouldn't be recognized when cash is received or when you ask for reimbursements. So you need to have a reasonable method of recognizing that revenue, your progress on the grant, basically. How do you earn this revenue on this grant? Most of the time, what we use is direct expenses, because if there is a lot of payroll, if you work on the grant, kind of assume that you're earning this revenue doing the work as you work on the grant. So the revenue will follow direct expenses proportionately. So we'll have direct expenses, we add indirect cost rate, and we add the fee. But it won't be when you get the cash, and it won't be when necessarily you ask for reimbursement. It's usually different time period. That matters for tax returns, that matters for financial statements. And that's if you have to be audited, that's how the books will have to recognize revenue. I think I have a couple of questions here. So maybe I take it now. What are your clients doing to reduce indirect expenses, like including rent as direct for a company that has only one grant? So what I usually tell clients to think about is your grant total amount is somewhat fixed. Yeah. So you're gonna get $275,000, and regardless what proportion of this is indirect or direct, it's not gonna, you cannot get more. Yeah, the grant won't be for more. So at the end of the day, you need to figure out how much you need in direct expenses. Yeah, what do you need to do the work? That's gonna be your direct expenses. And I've seen clients, projects which require very little direct expenses, and projects that almost eat all the grant with direct expenses. So that's the main thing, how much money do you need for direct expenses? As far as indirect costs, you can then include, some indirect costs in direct if you want, like, but the rate is, the rate sometimes is a afterthought after you figure out direct expenses, unless it's very huge, then you cannot get it. Maybe you don't have that much indirect expenses. So there's no easy answer to this question. It's not like very straightforward what to do. In that second question, is it possible to engage with an accounting firm to handle the issues addressed here? So a startup with very limited funds, if they only have SBIR grant. Well, if you're asking me, it's of course it's possible that you can hire an accounting firm. If they know what they're doing, they can set it up and get it going. Some of our clients, we have clients, do some accounting themselves after that, and maybe we take a look, or we do certain things, they do certain things to keep the costs down. Again, it depends how much money you actually have in an indirect cost rate, because if you have a nice chunk of indirect costs, it will be easier for you to pay for those services. But yeah, that's how I would think about it. I mean, of course, you can get somebody to help you to set it up. And it's just, I mean, we have clients with tiny grants. If we one grant, they have enough money in their cost rate. They not the whole grant is eaten up by their expenses, that they can, even with no additional funding, they can afford having somebody, third party, to help them. Okay. Couple of more things, and I think if there will be more questions, we can talk also at the end. I wanted to mention the financials review. So we're going to be talking about the audit at the end, but please remember the government agencies have a right to come at any moment and knock on your door and start auditing your financials. In addition, in various steps, when you're applying from phase 1 to phase 2, there's various financial reviews that they, discretionary to the reviews done by the agencies, the way they want it, the way they designed it. This is an example of what's happening currently if you apply for phase 2 NSF grant. you'll have this financial review, and there will be certain things they're going to ask you for. And I just want to make you aware of this. They're going to ask you for financial statements, and financial statements, full set of financial statements. So the balance sheet, income statement, statement of cash flow, statement of changes in shareholders' equity, and no disclosures. So just full-blown financial statements. They prefer to have it on US GAAP basis. If you cannot provide them with that, they'll ask you to provide a list of differences between your basis and GAAP basis, which kind of forces you to figure out what the GAAP bases are anyway. So really, it's the best to keep the books on accrual US GAAP basis to begin with. And this is for 2 prior years. And if you have a review done, in the second half of the year, they will also ask for the current year interim financial statement. So they'll ask for this. They'll ask for written procedures for internal controls. They'll ask to see your chart of accounts. They ask to see project ledger and some other information. Sometimes they ask for cash flow projections. Sometimes they ask for debt detail, unless it's already in financial statements. They ask for cash, for banks, tax returns, and many, many other things. So this is quite extensive review, especially considering that they give you 8 days to put everything together. And this is 8 working days. So there's always a weekend in between. So really you have 6 working days. So it's a short time, and we always tell clients, if you're applying for phase 2, you send your grant application, you start putting these things together, because it's really very, very hard if you have nothing ready to just put it all together in 8 days. And different agencies have different processes. So if you have grants from DOE or the Department of Defense, you never know. Sometimes they even come and they do the audit themselves. So just wanted you to be aware of this. So the last topic we cover is audit. So besides the fact that the agencies can come and ask questions at any point of time, there is also a general requirement for having what we call single audit done, or audit under uniform guidance. And this is an audit which is pretty, the scope is very large of this audit, because we are auditing your financial statements. So if you had a normal financial statement audit, that is included in there. And then you have additional audit of compliance for your the federal programs. So those expenditures, and I audited to make sure that you comply with all the requirements, award requirements. And there is an audit of your internal controls over this compliance. So it is quite a big undertaking. It will obviously depend how big your company is and what you have besides the federal grants going on in your business, because it's not just federal grants audit. There is another audit which is a little bit smaller in scope. It's called program-specific audit. And that one, the main difference is from single audit is that doesn't entail full financial statement audit. So you only prepare a statement of your federal expenditures, and that's the only thing which is audited. Can save time if there is a lot of other things going on with the company, because they won't be audited. But as specific requirements when you can have that audit done. You have to expend funds only under one federal program. And if you have R&D grant, which probably majority of yours are, the SBIR is R&D basically, that can be only received from one agency. So you can only have, for example, grants from NSF. But if you have NSF, NIH, you're not eligible anymore. And there also have to be no other statutes, regulations, or conditions that would preclude you to have this done, and the agency should approve that. So you should always make sure that the agency you're dealing with approves that. Now, when do you have one of those audits? it's driven by your expenditure. So 2025 calendar year, if you expend $1 million or more in a fiscal year, then that fiscal year has to be audited. And that threshold was $750,000 in 2024. So if you look at your 2024, you want to figure out whether you need an audit, you would have to think about $750,000. If you have a grant going on now, and you're thinking about whether you have to be audited in 2025, it's $1 million. And that threshold is not, right now it's going to stay 1 million until they change it again if they want to change it. But there is no change in the law right now. So we do see those happen, especially if you have phase 2, maybe a couple of them going at the same time. NIH is often the case with some bigger grants. So you need to be aware of it, and you can to some degree, monitor that. If you think you want to be close to $1 million, you can you can try to spread it more over even 2 years. Then don't bunch it all in 1 year. The audits are costly. I mean, it's a minimum. I mean, it's 15,000, 20,000, 25,000. It depends. It depends how big you are, but it's not 3,000 or 5,000. So just to give you a range of how much an audit can cost. We have a little bit of time. I have a couple of questions here. Let me see. Since we are a new firm without a prior cost basis, how much detail is needed to back up estimated indirect costs? We estimated 40% indirect rate due to rent, lab space, benefits, payroll taxes, etc. So again, if you don't negotiate the rate, so if you use safe harbor rate, so below certain threshold, you really won't have to file any proposal. Yeah, so you can estimate your future rate, by yourself, try to be reasonable, and possibly nobody's going to look at it, or maybe if they look at it, if you're close enough, it will be okay. If you have to do actual proposal and you don't have any prior, I mean, if it's the first thing you've ever done, which would be unusual, but let's say that's the case, you can do like projection, what they're gonna be. So you can submit a projection to them, and if they accept it, that's okay. Yeah. So it varies. It's just it has to be looked at particular situation and what you need to do, what you need to supply or not. The question for indirect expenses was related to recent cuts in indirect rates. The cuts are not for SBIR yet, but wanted to prepare in case they cut indirect rates. Yeah, I mean, that's a lot of going on right now. So unfortunately, we all have to be aware of what's going on, and things can change and the rules can change. So yeah, I think there was NIH rates, and it's hard to keep track. So when you're applying for a grant, just need to make sure you talk to the agency and make sure what rules are you following currently. So this is the last slide. I don't have any more questions, so maybe, I'm sorry. I go over this quickly. So this is kind of a summary of compliance requirements that may apply to your grant. And that's what an auditor is using when auditing if we had to audit your federal program. I thought it was kind of a nice summary just to see what you need to comply with, kind of a very high level. And I thought I'd just go quickly through that. And not everything applies to SBIR grants, obviously, but so the first thing, activities allowed and unallowed. So we would be checking whether what you're charging to a grant is for the work you're allowed to charge. Yeah, so if you are supposed to work on a project, somebody put payroll and work on the project, that's for activities allowed. If that person actually went and did some, advertisement with an agency and spent the day there and they charged a grant, that would be not allowed activity. Yeah, so that's pretty straightforward. Allowable costs, I mentioned that, we're checking whether what you charge is allowed by nature. So whether that was, lobbying, or whether that was just payroll, this kind of things. Cash management, that's a bit tricky. It depends on the agency, but most of the time you're not supposed to draw money until you have expenses on a cost reimbursable grants. So you're not supposed to just, draw a big chunk of money up in advance. And so if that's the rule, we would be checking that. The next 2 points usually don't apply. Matching, we don't often see with the SBIR grants, but we see some sub-awards sometimes with matching. So if you as a company are supposed to put some funds toward this project as well, we have to test this. Period of performance is very important, and I talked about it. Is the expense in the correct period? That drives the limit for the audit. So if you put $200,000 in January instead of December, it can change even if you have to or don't have to have an audit. So you have to watch that, especially for big expenditures. And subrecipient monitoring we talked about. So so I hope that kind of gives you some overview of the requirements and what the main things to concentrate on are. If you set it up early on, the phase 1 grant, not much going on, you get in a good habit of doing these things. As things get more big and more complex, it'll be easier for you to add on and have everything going correctly. I think I have a couple of more questions here.
A couple more questions. We'll call these the last 2. So yeah, why don't you go ahead and answer?
Okay. If an SBIR grant is 250,000, are indirects on top of this? Well, if the total grant is 250,000, no, they would be part of it. So the 250 would be direct, indirect, and a fee normally. I think that's what you're asking about. So that would be total. How do we account for price challenges? The money would be expended on trying to win the prize before the government pays. These are becoming more popular from the government, like DoD, X-Tex. Well, I would have to see the actual contract. I'm not familiar with this particular one. In general, the rules for prices. So if you go and there's a competition and you won a competition and you get $500,000 check or $250,000 check, that's revenue when you win the competition because there are no string attached to this. If there's any string attached, then we look at it. I mean, maybe there's a safe. Well, if there's a safe, you are basically you basically gave away equity. That's not revenue. If there is any other, if there's a project attached to it and they give you money to run a project, then we're looking at the project, It's the same as any other project. What are your deliverables? What you're supposed to be doing? When can you get the money? So that would have to be analyzed and see what the particular award is, what the particular agreement between you and the organization who award you the money is. And if it's a federal government, we would have to look at that. I think we'll have one more. I try to be quick.
Yeah.
Are DoD SBIRs that are contracts in the sense that the payment provided after delivery of a report product, separate time tracking for labor? Not sure. Again, I would have to see the contract. I don't think I've seen. Normally, SBIR would be a grant, not a contract. And you would be basically, the government wouldn't be getting anything. So the difference between contract and the grant, in my mind, is usually if you build an airplane for a DoD, it's a contract. They're getting an airplane and they're paying for an airplane. If they giving you money to do your R&D, you're keeping the R&D, and they can use it for free, but really you're keeping an R&D. That's usually a grant. They don't getting anything from it. Okay.
Cool. Well, thank you, Renata. I'll ask you to stop sharing, and I'm going to share for 1 second. Fantastic. I mean, just so much. As you can all see, there's a lot to understand in these, but if you get it right at the beginning. So thank you. And Renata's firm, this is what they do. So a little advertisement. Couple things. If you're down in here in Ithaca, June 11th, a few weeks from now, we have our one of our networking nights here at Rev, and this one's focusing on women in entrepreneurship. We'd love to see you here. There's going to be some pitches, and there's always tabling and food and so forth. So we'd love to see you here. Applications are currently open for our big Ag Tech conference competition, Grow New York. $1 million first prize and some, 2 500,000s and 4 250s, and a fantastic conference will be up in Canandaigua. So if this is you, You got till May 15th to get your application. It's a pretty thorough application, so you definitely want to get going now because there's just a few days left to go. And lastly, just to stay up to date with all of us, scan this, grab our newsletter, other content sessions like we just had with Renata will be announced there. We do them every couple months or so. Other events, if you're interested in joining Rev, if you're a scalable startup, that doesn't mean tech, by the way. It means, anything that's beyond sort of a Main Street business. We'd love to chat with you, and see you here at Rev. Come to some of our events. So sign up for the newsletter, and it's an easy way to keep track. But Renata, thank you. Really, really.
You're welcome.
And we will hopefully see you all soon. Thanks for being with us today. Appreciate everyone being here. I hope it was useful to you. Take care, everybody.